Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Loans in the Philippines are set to get cheaper after the Bangko Sentral ng Pilipinas cuts its key rate to 4.5% as policymakers prioritize supporting a weakening economy. Fitch Ratings warns that the Philippines' flood control corruption scandal is now hurting investor confidence and could threaten the country's credit rating. Now, rogue tax audits may soon come to an end as the new Bureau of Internal Revenue chief launches a crackdown on extortion inside revenue offices. And a 60 billion peso fund transfer has triggered a legal showdown with Executive Secretary Ralph Recto defending the move even as the Supreme Court orders the money returned. The Bangko Sentral ng Pilipinas, or BSP, has cut its key policy rate to 4.5%, the lowest in more than 3 years. This is the fifth straight reduction as the central bank signals that its easing cycle is entering its later stages. Governor Eli Remolona Jr. says another cut remains possible if the economy slows more than expected. Growth is losing steam, with the Philippines posting its weakest expansion in 4 years at 4%. Business confidence has also taken a hit amid a high-profile corruption probe in infrastructure projects. Cheaper borrowing could give companies and investors some much-needed support, but uncertainty over governance and the broader economy may keep confidence fragile. Now, a corruption scandal is now rattling the Philippines economy, and global credit rating Fitch is sounding the alarm. Fitch has kept the country's BBB rating stable for now, but it warns that prolonged political instability, weakening growth, and rising fiscal pressures could eventually trigger a downgrade. The impact is already clear. Public investment is softening. Government spending is slowing, and GDP growth is losing momentum, and foreign investors are pulling back. Fitch says restoring confidence now hinges on stronger governance and real accountability, calling these steps crucial to protecting the Philippines' credit profile. A downgrade would mean higher borrowing costs for government, slower economic growth, and fewer jobs, impacting everyday Filipinos and the country's financial stability. Now, the Philippines' tax agency is cracking down on corruption, with Bureau of Internal Revenue, or BIR, Commissioner Charlito Mendoza vowing to stop rogue officials from using audit orders to extort businesses. Today, regional directors can issue letters of authority, or LOA, without central approval. Mendoza says this absolute authority has allowed some personnel to pressure taxpayers into paying under the table. LOAs operate like court search warrants, letting BIR staff examine financial records. Under the new rules, every LOA must now be cleared by the Commissioner's office with a written explanation for why an audit is needed. Lawmakers say some officials have been pocketing up to 70% of collections and remitting only the remainder to the government. President Ferdinand Marcos Jr. appointed Mendoza as commissioner on November 12, replacing Romeo Lumagi Jr. Mendoza's reforms aim to deliver a fairer tax system and a stronger protection for businesses against the abuse of power. Now, 60 billion pesos in PhilHealth funds are back in the spotlight, and Executive Secretary Ralph Recto is now defending his role in the controversy. Recto says he only learned about the question provision when he assumed the finance portfolio and issued DOF Circular 003-2024, a move he says was based strictly on the General Appropriations Act. He also points to his work on the Universal Healthcare Law, stressing that he understands how critical proper health fund management is.
I'm very much familiar because I am the author of the Universal Healthcare Law. We have a different legal interpretation as well as the author of the law. We did not take any money from the reserve funds of PhilHealth. That is our legal interpretation. What we took was the excess fund subsidy of the national government that was not spent by PhilHealth.
The clarification aims to reassure investors and stakeholders that public funds are monitored closely, a key factor in maintaining fiscal stability and government credibility. Now, fiery denial is making national headlines. Armed Forces of the Philippines Colonel Raymond Dante La Chica is rejecting claims raised by Ramil Lagunoy Madriaga, a detainee who alleges he once worked as a bagman for allies of Vice President Sara Duterte. Madriaga made a series of accusations involving campaign operations and funding, all of which remain unverified. Madriaga's statements have sparked public attention, with questions now focused on the credibility of his testimony and the motives behind his claims. In an official statement, Colonel La Chica says that he does not know Madriaga and calls the allegations baseless, flatly denying any connection or involvement. He adds that AFP assignments, especially those involving top officials, follow strict security screening and cannot be influenced by private individuals. For investors, what matters most is clear and credible governance, because trust in national security and institutions directly supports the Philippines' economic stability. Now, the Philippines heads into the final stretch of 2025 with a softer growth outlook, weaker sentiment, and a new rate cut from the Bangko Sentral ng Pilipinas. The Monetary Board delivered another 25 basis point easing, bringing the policy rate to 4.5%, as growth risks now outweigh concerns about the peso, with forecasts for 2025 to 2027 revised lower and a widening corruption probe casting a shadow over confidence. Investors are now watching how Malacanang will respond in this critical final stretch. To help us make sense of this moment, we're joined by veteran investment banker and Maharlika Independent Director Stephen Kuunhin. Hi, Stevie. Good morning, and thanks for being here with us.
Well, thank you for inviting me to your show, and happy to be here in person.
Well, it's always good to hear from you, Stevie. You've got amazing insights. Last time we spoke about a month ago, you said that the Philippines was in a yellow light scenario, referring to that traffic stop. We could turn green, we could turn red any moment, depending on the developments. Where do you see us today, a month after?
We're still in yellow, surprisingly, because first, seasonality is helping that. Nobody really wants to, people want to enjoy and take it easy between now and the end of the year. But what happened between a month ago and now? Nothing. First of all, the people who, or let's say, are unhappy but not unified. You basically have three camps with three conflicting objectives. Mm-hmm. This is the anti-administrations. Mm-hmm. First, one basically says, whether I'm happy or not, the alternative is worse, so let's stay with the situation, unhappy as I am. The second is, I want the vice president to take over. The third is, I don't want either of them to take over. But in that division always helps the incumbent. And so they haven't found a unified message, which if you look at previous, in circumstances when things change, the incumbent is relatively stable now.
Yeah.
The second part is, what about what the incumbent is doing? The president has basically shows he's aware of the situation. It's one thing to be an administration in denial. They're not. Now, are the actions they themselves indicate they will take and push through going to be substantial enough, executed to the satisfaction of the people? That also still remains to be seen. So therefore, if you look at the administration side, they still have the power to take the initiative and push the narrative, but it's a work in progress. If you look at the people who are against the administration, they're divided among what they feel is the solution. Yeah. So we still have the situation roughly where it is. So it's still a yellow light. We still don't know if it's turning red or green.
Yeah, I mean, it's December. People are very busy. It's the holidays. They want cheer. You think come January, there's going to be a deeper push for accountability when the holiday season settles? And what would be the sentiment-changing scenarios?
Okay, if I was on the first of all, if I was on the opposition side, my view would be you have to speak with at least I don't say one voice because we're a rambunctious pseudo-democracy, so we never have one voice, but there should be a dominant voice, all right? Right now, there are three equally loud voices. If I was on the administration side, I would basically say, I'm doing something about this, not to perfection, because we live in the real world, but to the satisfaction of enough. Now, What would that be, in my view? And I'm not a political analyst, I'm just thinking as a retired investment banker and board director. You have to look backward and forward. The backward is certain people who were responsible for the worst excesses have to be made to pay the price, number one. Because it can't just be lip service, all right? Because if you look at the history, 10, 15 years ago, we were very shocked with Napoles. And here we are.
This one is 10 times over.
Exactly.
Yeah.
No. So that's the backward-looking part. The forward-looking part is, I'm really tired when people keep saying heads must roll. And I said, what if you rolled ahead with
and another one takes over
similar
with a
or
similar
worse,
agenda?
which is, again,
What we
10
have
years
today.
ago, what did they say? Napoleon's heads must roll, everything. Where are we 10 years later? No. So my point is, so the looking forward part must show substantive change. Not perfection. We don't live in an ideal world. But substantial change. So they'll say, at least the trend of going this way for things getting worse is going to reverse. And all you want is sufficient improvement. Because, again, everywhere in the world, you don't have an ideal situation, but are you trending correctly in a substantial manner, or you are regressing in a substantial manner? I think if the government can show it is trending positively in a substantial manner, people will be satisfied. Then there's a third aspect. If you look at in the past when, let's just say, extra-constitutional change succeeded and failed, it's EDSA 1, EDSA 2, and Halo Garci. Now, also let's assume towards the end of the first Aquino administration, in EDSA 1, whether you agreed or disagreed with which view, there were no limits to the first president, Marcos's term.
He was a dictator.
Exactly.
And that was that.
The feeling was, if we don't get a change, he will stay as long as he wants.
Yeah, whereas in this scenario, it's until 2028.
Exactly.
So the idea is, do we ride it out until 2028?
Exactly.
You know, the camps, when you look at the camps, it's do we ride it out until 2028? Do we push Sarah forward? Or do we do away with both of them?
Okay, now, my answer is, for 2 years, given how involved this is going to take, I think the consensus will be, whether we're satisfied or not, just deal with it and tiis na lang. If you look at the first President Aquino, people were very unhappy after the 1989 coup, not because it was her fault, but because, let's be blunt, if you were old enough at that time, the delivery of government services and efficiency was terrible. It was abysmal. Okay? And if the Ramos administration didn't come in and basically made government effective and competent again, I don't think the democracy would have survived. But people were very unhappy with the way the government was being run. Not that she was corrupt, nothing. I mean, she was the democracy icon, everything, but it was terrible from a government. You had to be here at the time to realize how long the queues were to get on buses, 12-hour brownouts, things like that. Okay, now, why was there no more coup attempt after 1989, after that terrible one in October 1989? Because people said she's not going to run. She's kind of, by mid-1990, when there were no more, there wasn't another coup attempt, everybody just said, she'll be gone in 2 years.
Yeah.
Is it really worth the trouble?
Okay.
We all have our chance in 2 years.
Yeah. Let's bring it back to today. You know, a red flag, Fitch, credit rating agency, one of the big three, says that corruption and instability are now real credit risks. How serious is this warning from a market standpoint? A possible downgrade in our credit rating. We're at BBB now.
Okay. The interesting thing is they said, watch. So in other words, they're saying, do something, it won't happen. Don't do something, it may happen. Not it will, it may. Because credit ratings basically don't say you're a good or bad country. They say you're a good or bad credit risk. And generally, the rule for investment grade for a third world country like ours is 60% debt to GDP. And we're at 58. So we're saying we're fine. From a credit fundamental and then from current account, which means how much money is going in versus how much money is going out, because remittances remain stable, we're also fine. Now, having said that, that is something that could change if you have chaos. So what they're saying is, deal with it. If you deal with it, everything will be fine. If you don't deal with it, we'll have to see how it's
We're going
fine
to
or
have to
not
make some
fine.
changes, yeah. Okay. Sayang, because at the beginning of this year, the talk was for an upgrade.
Yes.
And then now the tide has changed so much.
Yeah, let me be blunt. It's still possible because if substantial reforms are implemented and the people are satisfied, yes. Just because they're warning doesn't mean it won't come for 10 years. They'll just say it's addressed, they're lowering the deficit, the debt to DGP ratio is stable, everything, and they'll say fine.
Good point. Okay. Another thing I wanted to talk to you about, both the Fed and the BSP cut interest rates. What's the bigger market signal now?
Actually, I would be watching the Fed because the BSP, basically, you can only stray so far from the Fed because you will hurt your exchange rate. And the BSP has a dual function, which this BSP and Monetary Board has been extremely qualified in following, which is low inflation and stable exchange rates. And you look at all the movement, given all the movement politically and noise, hardly anything. It's a rounding error, the movement. So kudos to the Central Bank and the Monetary Board, which I'm not affiliated with in any way. I just admire the very steady and mature leadership they're providing. Now, the Fed is the issue. We're going to have a new Fed chairman next year.
There is talk in Washington that they're going to be replacing Jerome
No, not the
Powell.
talk. It is certain.
Okay, it's certain. How do you think that's going to change the direction of the U.S. and globally and emerging markets like the Philippines?
I would say that's fraught with risk because if the person is going to follow what the appointing authority, President Trump, wants, it is kind of what most mainstream economists think is not needed at this time, number one. Number two, a lot of times, especially if there's economic uncertainty, putting in a new central bank governor has been accompanied by a crash. Who is the most celebrated central bank Federal Reserve chairman of my lifetime? Alan Greenspan. When was he appointed? 1987. When was there a crash? 1987. Now, he recovered very well from everything, but they tend to basically try to test the new governor. Now, I'll give you another example. The terrible crash in 2008. Bernanke had just become governor. Now, the U.S. was very, very fortunate because there were three things that made 2008 painful as it was remedied. One, you had the former chairman and CEO of Goldman Sachs, Hank Paulson, as Treasury Secretary at the time.
Okay.
You had Bush and Pelosi agreeing to put differences behind for the good of the economy. And Bernanke's dissertation was on the 1929 crash and how to avoid all the repercussions after. So they were in a terrible situation, but they did something very constructive about what could have been a crash and an economic depression. They made it a severe recession, which was not good. Now, are the same three circumstances in place now? Are the Democrats and the Republicans going to cooperate if there's a crash? Is the new central bank governor, chairman, going to be as accomplished as Bernanke, who was uniquely qualified to handle a crash? And is the new Treasury Secretary, Besanet, have the clout with Wall Street and the markets that Hank Paulson had?
Okay, I'm going to have to stop you right there. It's super tight on time, but I wanted to ask you before we go, what is your wish for the Philippines? As we are in this junction, what is your wish for the Philippines?
I have a very simple wish, which is twofold. Stop thinking in the short term, because we have long-term issues that need long-term solutions that are sustained. And to achieve that, you have solutions which have to transcend administrations. It has to be a consensus. So my biggest wish, can we please depoliticize several issues which are for the good of the country? Education, food security, infrastructure, economic development. Do that have to be political issues that change between administration? If you look at the other Asian countries, they aren't political issues there. And maybe that's why they progress more than us.
Okay.
It continues regardless of who's the premier or the president in those countries.
Yeah. Okay. Too bad that's all the time we have for this discussion. Stevie Kunhing, veteran investment banker, thank you so much for sharing your thoughts with us.
Thank you for inviting me, and happy holidays to the viewers.
Okay, thank you, Stevie. All right, we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Let's take a look at how Western markets performed overnight and what that means for trading across Asia this morning. Now, major United States stock indexes rose Thursday, with both the Dow Jones and the Industrial Average and the S&P 500 closing at new record highs. Investors cheered the Federal Reserve's latest interest rate cut, even as the central bank struck a less hawkish tone than many expected. Now, IT is the S&P 500's first record close. This is the S&P 500's first record close in more than a month. Investors also rotated into financial and material stocks as valuation concerns grow around high-flying artificial intelligence names. Meanwhile, European markets edged higher after a string of muted trading days, with traders welcoming the Fed's rate cut and digesting the latest policy move from the Swiss National Bank. Let's check on how markets in Asia are doing this Friday morning. Right now, the Nikkei 225 is trading to the upside, up by 0.9%. Hong Kong's Hang Seng Index up by as much, up by 0.9%. Shanghai's Composite going the other way, down by 0.5%. And Singapore's Straits Times Index higher by 1.1%. Taking a look at our market, the PSE Index as of 10:25 this morning is trading to the upside, higher by 0.4% to 60.15. All shares index up as well, up by 0.3% to 34.65. Taking a look at the sub-indices, we're looking at a picture of strength, with the mining and oil counter up the most, up sharply, up by 2.1% in early trade. Total volume is at 253 million shares, valued at a little over 1 billion pesos, at 1.17 billion pesos exactly. Advancers, we've got 73 for a positive market breadth, and decliners 51, and 53 stocks are unchanged. Taking a look at the currency front, the peso opened at 58.98 to the dollar, up from its previous close of 58.99. The Sandigan Bayan acquits former Quezon City Mayor Herbert Bautista of graft in connection with a 25 million peso solar power project from 2019. The court found Bautista not guilty, citing the prosecution's failure to prove its case. His co-accused, former city administrator Aldrin Cunha, was convicted and sentenced to 6 to 8 years in prison. Bautista, who grew emotional as the ruling was read, had his whole departure order lifted. He declined to speak with reporters after the hearing and was represented by Divina Law. Now, as 2025 winds down, BDO Chairman Teresita Desi C. Coson, has a message for Filipinos. Stay positive. She says optimism and focus are key as the bank gears up for 2026. C. Coson notes that despite political noise, keeping focus and staying optimistic are crucial to keeping the year ahead on track. She assures that BDO will stay the course with its strategy and expresses confidence that the bank can meet its targets next year. C. Coson adds that strong fundamentals, disciplined planning, and a resilient team will help maintain stability for both customers and stakeholders. Now, as we close out the year, it's easy to get caught up in the headlines, the challenges, the corruption probes, and the market volatility. But through it all, one question matters most: what keeps us rooted in the Philippines and what still makes this country worth believing in? This December on Business 360, we're hearing from respected business leaders, each sharing what makes the Philippines special to them. Today's message is from Mariana Zobel de Ayala. She is part of the next generation of leaders driving the Ayala Group forward, overseeing key initiatives across property, financial services, and urban development. As Managing Director of Ayala Corporation and Senior Vice President of Ayala Land, she helps shape major projects and group-wide priorities while also serving on the boards of Ayala Corporation, Ayala Land, and BPI. Here is her message.
What I love about the Philippines is the Filipino sense of humor. I feel it is one of a kind and world-class. Even in the most darkest of days or most challenging of times, it brings lightness to any room. I want to take this opportunity to wish everyone a very, very Merry Christmas and a restful holiday season with your loved ones. All the best for 2026.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on DNC, the Bilyonaryo News Channel.